Hi everyone, I am CS Kunshi, Indirect Tax Expert at ClearTax, and today we all gathered here to understand about the year-end compliance with GST perspective. But before we even begin our today's session, I just want to check if you all are able to hear me or not. So if you are able to hear me, just say hi on the chat box. Great. So it seems like everyone is able to hear me. So with this, we'll just start our today's session, which is on year-end compliance with GST perspective. So if we just talk from the GST perspective, we all know that there are a lot of things which we have to consider, be it that kind of reconciliation, be it something which is related to sales, maybe there could be something which is related to ITC. And then we have some forms which needs to be filed. There could be certain annexures, there could be some LUD form. So we also have to look into that perspective. There can also be applicability of something. Let's say there's an applicability of maybe e-invoicing. There could be, like, let's say I want to convert myself from a QRMP to a normal scheme. So there are many things which we have to look after, right? So in today's session, we are going to look after what are that year-end compliance which we should look, which we should follow, and make sure that all of your checklist has been done properly. So with this, we'll just start our today's session, which is on year-end compliance with GST perspective. So first and the foremost thing is about the e-invoice applicability. And we all know that today, if we just talk about e-invoicing, it is applicable to the taxpayer whose aggregate turnover is more than 10 crore. Then we would be wondering that, okay, if my turnover is more than 10 crore, then I would already be generating the IRN number. Then what is the need of this? What is there to the thing where we have to think, okay, this I have to start from this particular financial year. So for that, we know that when it comes to the applicability of e-invoicing, e-invoicing is applicable in case your aggregate turnover exceeds the limit of 10 crore, right? And when we look into this aggregate turnover, it's not only for the previous financial year, it starts from 17-18, which means if your aggregate turnover exceeds the limit of 10 crore, be it 17-18 or 18-19 or 19-20 or 20-21 or 21-22 or 22-23 in any of the financial year, if your turnover limit exceed 10 crore, other than the cases where you are covered into that exemption thing, which means if you are into a banking company, right? Or maybe you're a GTA and all. So in that case, invoicing is not applicable. So if you remove that, for other entity, if your aggregate turnover at a PAN level exceed 10 crore, then invoicing is applicable. Now the point is, then how come this become relevant for our start of the year? So here in the last year, we would have already checked if the turnover had exceeded in my, especially for 17, 18, 18, 19, 19, 20, 20, 21 or 21, 22. We would have already checked it. There was no problem there. But let's say in the last year, which means FY 22, 23, finally your turnover exceeded the limit of 10 crore. In that particular case, the important point is that you have to generate the IRA number for each and every document which you are issuing from 1st April. So if in mid of the year, which is in FY 22-23, your limit of this 10 crore has exceeded, and when we are looking into this limit, this is always at a PAN level, and here we always include all kinds of document, whether it's your B2B, whether it's B2C document, whether it's your exempted supply, any kinds of supply. For the purpose of calculating your turnover, all of your outward supply has to be considered at a PAN level, right? That is for the purpose of knowing that whether this invoicing is even applicable to you or not. That's one important point. Then once you defined, okay, my finally annual aggregate turnover has exceeded the limit of 10 crore, which means my all the supplies, whether it was my export supply or my B2B supply or a B2C supply or exempted supply, everything, by combining all this at a PAN level, it has actually exceeded 10 crore, invoicing is now applicable. Then you will start generating your IRA number for all of your B2B and export transaction, right? So you don't have to generate e-invoicing for your B2C supply or other supply. The e-invoicing has to be generated only for the B2B and the export transaction and the corresponding credit debit note if you're issuing that. That is what we have to do, right? So this was the first important point which we have to always consider, that whether the limit, the turnover limit has exceeded the threshold limit in the preceding financial year or not. So I could see there is one question from Rohit who is asking, is there time limit to generate invoice? Can I generate invoice of 23rd March in April 23? So Rohit, if you ask me, I will tell you one simple thing. See, when it comes to the generation of e-invoicing, right, this e-invoicing in itself, right, a normal document, if I just see there's a normal piece of document, which is a normal document I have issued, if this e-invoicing was applicable to you, right, and you have not generated the IRN number and you have not put the QR code on that particular invoice, then it is not even considered as a valid document, which means till the time it has an IRN number on that particular document, it is not a valid document, which means you have not even issued an invoice. So all the penal things which is there in case you don't issue an invoice, that will be applicable on you if you're not doing that, right? So which means you have to get the IRN number on the real time basis, as and when you generate the invoice, which is normal copy, you have to get the IRN number so as to make that invoice as a valid document. That's a one important point which we should always understand. I could see there's second question from Varsha, and Varsha is asking whether we have to take combined turnover from financial year 2017 to till date. No, 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 Varsha. So here, see, whenever we are looking into the aggregate turnover at a pan level, you always have to look into the individual year. Check in 17-18 whether it exceeded the limit or not. Of that is 10 crore. Okay, let's say it does not get exceeded. Go to the next year. 18-19 whether it exceeded, it didn't exceed it, then go for the next year. So if in any of the financial year it got exceeded to the 10 crore limit, then this invoicing is applicable to you, otherwise it is not applicable. But you have to check in any of the year, right? So it's any of the year. Let's say in finally 18-19 it does not exceeded, 19-20 it exceeded, 20-21 it does not exceeded. In that case, again, e-invoicing is applicable because in one particular financial year the limit was exceeded, which is exceeded the threshold limit, right? But you don't have to combine it. It's not like, okay, from 17-18 till 2023 I will combine all the turnover and then check whether invoicing is applicable or not. That's not the case. It have to be checked always at a financial year. You check for every financial year, and in any of the financial year if it exceeded the threshold limit, then the invoicing is applicable to you. Another question from Niranjan, who is asking, can we generate for exempt supply? So Niranjan, because when it comes to exempt supplies, right, we always generate the bill of supply. And in case of the bill of supply, the invoicing is not required. So you're not required to generate the iron in case of the exempt supplies, because there you are not issuing the tax invoice, you're going to issue the bill of supply. But let's say there's a case where you have issued a like normal B2B invoice, which is a normal tax invoice, and the tax invoice have both the exempted and the taxable supplies. Because practically, if you ask me, today if we go with the invoicing thing, which the rule actually specify, there you cannot even generate, you cannot have both the exempted and taxable supply in the single invoice. But let's forget about that. Let's go to the practicality. Do we do that today? The answer is yes. Many times we issue a single invoice for both the taxable and the exempt supply. In that particular case, you have to generate the IRN number, and when it comes to exempt supply, just put the tax rate as 0%. I think that is what we have to do. I could see there is another question from Shankar, who is asking, is there any change with regard to e-invoice with effect from 1st April? So Shankar, there is no change. There is no reduction of the threshold limit of 10 crore. So 10 crore limit is still there. So there were discussions where they are going to reduce this limit of 10 crore to 5 crore, but till date it is not reduced. They have given an option to you where you can generate the e-invoicing on the voluntary basis. So they have already opened the portal. They have already onboarded 4 more NIC, right? So which means, sorry, 4 more IRP. So they have already onboarded 4 more IRP, and you can always generate the invoicing on a voluntary basis. So that option is now available. Earlier it was not there. But when it comes to the threshold limit, the threshold limit has not reduced. It is still the same, which is your 10 crore. Now, another question is from Venkata Sai, who is asking, my exempted turnover is 12 crore and taxable turnover is 2 crore, whether this invoicing is applicable or not. So here, Venkateshwar, since your total turnover, as I told you that you always have to check your aggregate turnover. And aggregate turnover includes your exempted supplies also. Since your total turnover exceeded the limit of 10 crore, in that particular case, invoicing becomes applicable to you. So you have to generate the IRN number. But that invoicing, the IRN has to be generated only in respect of your B2B supplies. And when I'm saying B2B supplies, you always have to generate only for tax invoices. You don't have to generate for bill of supply, which means whenever you are raising the bill of supply for all your exempted supply, for that you are not required to generate the IRA number, but you are required to generate the IRA number for all of your B2B taxable supplies, right? I could see there's another question from Amit. Amit says, is this applicable on services as well? Yes, Amit, invoicing is applicable for both goods as well as services. Another question I could see from Aarti, who is saying, is invoicing applicable on purchase return, which is debit note? Aarti, so see, whenever you talk about the purchase return, right, that's not nothing but your supplier is required to raise a credit note for that. And your supplier will be raising credit note. And if that to supplier, right, invoicing is applicable, in that particular case, the supplier is also going to generate the IRA number in respect of the credit note which has been issued by them. I could see there is another question from Chandra, who is asking, cross charge invoice will be raised on 31st March, but as working was not complete, we were not able to generate the invoicing. Can you generate? Yes, Chandra, you can always generate it. So as I always say, right, that the invoicing, it is a valid document only when it has the IRA number. But if you have forgot to like raise an IRA number, the government don't stop you to generate the IRA number. Today also, if you try to generate the IRA number for an invoice dated 31st March, they will always allow you to generate that. So you can always generate that. I could see there is another question from Varsha, who is asking, when we generate invoicing, how many time it requires to generate and when show on GST portal? Varsha, it is always one time, right? So for each and every document, it's a single time when you generate the IRA number. That is what we have to do. And when it comes to the GST portal, automatically that invoice which you have generated on the NIC portal on the IRP, right, that also automatically gets reflected on the GSTN portal. So within T+2 basis, which is within 2 days, you will see that this number will always be reflected in your GST1. Another question I could see from Neha. Neha is asking, can I check the applicability of e-invoicing on my vendors from the government portal? Neha, as of today, there is no such functionality where they have given that where you can check whether your vendors were required to generate invoicing or not. But what part you can always see, you can always look into the turnover. So there is an option of search taxpayer API. You can use that. You can punch in the GST number over there. From there, you would know whether that particular vendors is required to generate e-invoicing or not. And here ClearTax also have one functionality, right, where you can use their API. So they do have an APIs from where you would know that whether your vendors were required to generate invoicing or not, and are they even generating invoicing or not. So you can use that also to check the status of your vendors invoicing applicability. Another question is from CA Rohit, was asking, is it applicable to NBFC? No, Rohit, when it comes to NBFC, they are covered under the exemption list. Another question is from Divya, who's asking, is idle invoice number is applicable if turnover is less than 10 crore? No, Divya, when it comes to that limit, right, if your limit or the turnover is less than 10 crore, and I'm assuming you're talking about the PAN level turnover, in that particular case, invoicing is not applicable. But you always have an option. There is a voluntary functionality which has been given by the government. So if you want to generate invoicing on a voluntary basis, you are free to do that. I could see there is another question from Sachin, who is asking, can we please confirm if it is applicable for service invoice as well? Yes, Sachin, it is actually applicable for your service invoice also. Another question is from Vipul, who is asking whether this e-invoicing is applicable for discount debit note or credit note. So Vipul, again, it talks about whether you're going to raise a credit note which is as per GST, which means you're going to put the GST component also in that. If that's the case, then yes, the invoicing is applicable for that also. But if you say no, it's just a commercial debit note or the commercial credit note, in that particular case, this is just treated as a normal document, and then invoicing is not applicable. Another question from Prashun, who is asking, can we generate invoice as backdated? Prashun, ideally, it is not recommended. It's always that you always generate on the real-time basis. But another thing is whether government allows you to do that. The answer is yes. The government actually allows you to generate the invoicing, which is even backdated. Let's say today on 3rd April, you want to generate the IRA number for an invoice dated 31st March. They will allow you to do that. But again, you know that there are the reports which has been there by the officer, tax officer, and they know, so they always get this exceptional reports where they know that the iron generation date and the document date is different, and they look into that and they always ask you, they will always raise a notice to you asking that why there was a delay in generating the iron number. So all of these things are there, so you should always keep this all points in your mind. Now, the another question I could see from CB, who is asking if the turnover crossed in mid of 23-24, then invoicing applicable is from 24-25. Is that correct? Yes, CB. If let's say your turnover limit of this 10 crore, right, it exceeded on, assume on 5th of April, right? Till 31st March, your turnover was always below 10 crore. Finally, it got exceeded on, let's say, 5th of April. In that particular case, and when I'm saying 5th April 2023, in that particular case, this invoicing will be applicable to you only from 1st April 2024, right? So that's the time when invoicing will be applicable. Another question is from Deepak, who is asking, do we need to have a separate numbering for e-invoice, B2B and a B2C? Deepak, there is no such requirement. You can always have a same series, right? Let's say you issued one document to one person who is a registered person, let's say INV. At the same time, now finally you also get one unregistered person, you issued INV2 to that. That is completely fine. There is no problem, and you can always do that. Another question I could see from Rahul, who is asking if some GST is not having annual turnover greater than 10 crore in a year, but showing invoicing enabled on invoice portal. Yes, Rahul. So see, as I told you, when it comes to the application of invoicing, right, it is always at a PAN level, which means you always have to check your aggregate turnover at a PAN level. And I will give you a very simple answer, simple thing, right? Think about, you had one GST in the state of Karnataka, and then you have another GST, let's say in Delhi, right? So here in Karnataka, the limit, right? So they have turnover of just, let's say, 10 lakh rupees. It was a newly established business under the same PAN number, and the limit was just, turnover was just 10 lakh rupees. But there was another business, let's say in Delhi, and where the total turnover was, let's say, 20 crore rupees, right? In that particular case, when we check at a PAN level, obviously that has exceeded the threshold limit of 10 crore. Now you will be you are required to generate. So in this case, invoicing is applicable for all of your GST under that PAN, irrespective of whether the particular GSTN may have the turnover less than the threshold limit. Doesn't matter. We always have to check at a PAN level. When we check at a PAN level that, okay, finally your invoicing, the limit, right, has exceeded. In that case, now you are required to generate the IDA number for all of your GSTN for all the B2B and the export documents, right? Another question is from Raja, who is saying whether self invoice raised under RCM required to generate invoice. So, Raja, if you ask me about the self invoice is a purchase document. It's not your outward document. So, you're not required to generate the invoicing on the self invoice. So, this invoicing is only applicable in respect of all of your outward documents. So I think I have covered most of your queries which was related to your e-invoicing. But still, if I have missed, because I think there were a lot of queries which was there, still if I have missed any of your queries in relation to e-invoicing, please feel free to put that on the chat box. I think there is one question in respect of export document, whether e-invoicing is required for the export document. So yes, e-invoicing is even required for the export document. So it's required for your all B2B as well as export documents. Another question I could see from Kapil, who is asking whether the DSC or the manual side required if invoicing provided by vendor. No, Kapil, as per the rule, right? If there is an invoicing, right? If you have already generated the IRN number, in that particular case, the DSC is not mandatory. You can always, like the vendor can always keep putting the DSC, because if you have generated IRN number, then it is meant that it is already signed, right? So you don't need the digital signature again on that particular document. Another question from Sandeep, who is asking taxable turnover is 9 crore and exempted turnover is 1.5 crore. Whether invoicing is mandatory? Yes, Sandeep. In your case, invoicing is applicable, and you're required to generate the IRN number for all the B2B documents which you have issued for your, or the export documents which you have issued for your taxable supplies. Okay, another question from Deepak who is asking whether this invoicing applicability is as per the turnover, as per financials, or as per the turnover, as per the GST. So, Deepak, here when we look into the turnover, you have to look into the aggregate turnover definition as per GST, which includes your all the taxable supplies, exempt supplies, export documents, all your outward supplies. That is how you have to see, right? So, that is how we always look into the turnover when it comes to checking the applicability of the invoicing. Another question is, I think I have already answered. Anita is asking whether e-invoice digital signature is mandatory. No. So, Anita, if you have already got the IRA number, then you don't have to again put a digital signature on that particular invoice which has been generated. Another is from Vishal who is asking clarify invoicing on export document. So, as I mentioned already, Vishal, invoicing is applicable on the export document. So here, this was the first point, right? I think there are a lot many points. So let's go to the next point. And if I have not answered few of your query, I will anyhow take all your queries at the end of the session. So here, when we talk about the compliance part, right? The one part I was talking about was invoicing. So here, if your turnover has exceeded the limit of 10 crore in the previous financial year, which was FY 22-23, in that particular case, you are required to generate the IRA number for all of your B2B and the export documents from 1st April 2023. That's the first important point. Now, the second important point, if you are dealing with export, if you're into the business of export and you're going and you have opted that you're not going to charge any GST on that particular invoice, in that particular case, you also have to file LUT, which means if you're doing any export without the payment of IGST, in such case, you have to furnish this form. It's a very small form. You just have to give two witness detail, their name, their designation, their address. That's it. That's the form which you have to file on the government portal, which is an LUT. Under the user services, you can always find this. And this form is applicable for FY 23-24. So if you are doing, so the important point is ideally this should have been done till 31st March. But still, if you have forgot to file LUT and you are into the business of export and you are doing export which is without payment of IGST, you should furnish this form before doing any export in FY 23-24. Because if you don't file that, then there would be a problem, because then you have to first make the payment to the government and then only you can go ahead and claim the refund for that. So the government may even disallow your refund. So it's very important that you furnish this LUT form if you're into the business of export without payment of IGST. So this was like another important point which we should understand. I think there's question from Sashi who's asking what is LUT? It's a letter of undertaking where you just have to give two witness detail and telling government that yes, I'm actually doing the export and I will be getting all that foreign currency and everything. So that is what we have to do. Now, the third important point is about the composition scheme. So we all know that the government have this scheme which is known as a composition scheme. And when we talk about this composition scheme is there if your turnover is up to 1.5 crore. So here, if your threshold limit has exceeded that, right, and you want to go to the regular, then it's the time that you have to go. And let's say you were into the regular, you took the registration as a regular and you want to opt for the composition scheme, then you can always opt for the composition scheme, but this should ideally have happened before 31st March 2023, right? So the only benefit of this composition scheme is that there is only one return. You don't have to follow the I would say there are a lot of things, right? You have to file GST1, you have to file 3B, you have to file 9C, everything you have to do. When it comes to composition scheme, it's a very simple form which is GST4, which has to be filed on the annual basis, and then there's a kind of a challan which is CMP08, which has to be filed on the quarterly basis. So this was about the composition scheme, which should be done if you want to opt for the same. Now, the next important point over here is the GTA, right? So if you are a GTA, which means you are a goods transport agency, and when we know what is the definition of GTA, wherever I am issuing a consignment note, we all understand that when it comes to a GTA, and here I myself is a GTA. It's not like I'm availing the services from the GTA. So we know that in respect of the GTA, they have an option whether they have to pay the taxes under the forward charge, which means they are going to charge the taxes from the customer and then going to make the payment to the government. Or the second option is that they can go with a reverse charge, which means the recipient will be liable to pay the taxes under the GST, and the supplier, which means who is a GTA, is not going to charge anything and he's not going to deposit anything to the government, right? So for that, because we know that there was a lot of confusion which used to happen, I am availing that freight services from this GTA, which means whenever I'm selling something or whenever I'm purchasing something, I may be paying some freight, right? So if I'm availing that services, the question was like that I have availed the services, but I actually just don't know whether I have to pay the taxes under reverse charge or not. That was the confusion which we have a lot of the time. So here the government says that here GTA has to declare, they have to file one annexure, which is annexure 5 on the government portal. And this is easily available on the user services. So when you click on the user services, there we do have a form called application for the GTA where they have to opt for the forward charge. There they have to declare that yes, I have opted for the forward charge. And the forward charge, they have an option whether they want to go with a 5% without claiming any ITC, or they have to go with a 12% with claiming ITC. So they have to tell that, and once that they have done, then accordingly you as a recipient have to decide whether you have to pay the taxes under reverse charge or not, because that will be available basis that information. And not only on that annexure, right, whatever the invoices which has been issued by the GTA, they have to even clearly indicate in that invoices that they have paid the taxes under the forward charge, right? So this is how we would know, and accordingly we may always decide whether we are liable to pay the taxes or not. I could see there is one question from Vivekanand who is asking whether RCM under GT is applicable on transportation of exempt goods like agriculture produce. So, Vivekanand, if you ask me about the reverse charge, right, in that particular, it is not even applicable. So here they have already excluded, right, when it comes to the even the services of the GTA in respect of this agriculture produce and all, that is also exempt, and you don't have to pay any taxes under the reverse charge on this. Now the another point is that we all know that when it comes to the creation, because we are already on 3rd April, and when we are talking about the 3rd April, right, so we do generate the invoices, and when we generate the invoices we have to maintain some series out of that, right? So it's always good that from this new financial year you always start with a new series, that so that you know, okay, for this series this is INV1, then INV2, whatever the series you want to do it, you can always follow a proper new series from the start of the financial year. So be it your tax invoices, credit note, debit note, bill of supply, receipt voucher, so you should always have the maybe the same or the different series, you can always have it. Now another part is about the HSN code, right? So you might know that today what government have done is, today if you would know that while we are filing our GST1, right, in GST1 we do have one section called HSN summary. And when we just talk about the HSN summary, in that HSN summary we need to code the HSN number, right? We have to tell, okay, this is the HSN number, this was the rate of tax, this is the total taxable value, this is the total tax amount. That is a summary which we have to always submit while we file our GST1. But the important point is about the code, right? So there is an HSN code which we have to mention. So the here government have clearly mentioned, if your annual aggregate turnover is more than 5 crore, in that particular case you have to mandatorily code 6-digit HSN code. And if the turnover is up to 5 crore, then you have to code 4-digit HSN code. That is what they have done that. So you have to again make sure that if in the preceding financial year, which is in previous financial year, your that total aggregate turnover, right, it has exceeded the limit of 5 crore, in that particular case you make sure that the entire HSN master you have today in your ERP is updated and it has your 6-digit HSN code. Because if that's not the case, then another problem or another challenge you are going to face would be that while you're filing your GST1, you are going to get the validation error from the government, and you have to keep on correcting that validation error at that time, right? So this is the another important point which we should understand, where the government have already kept the validation and we have to just follow this. Not only this, the another part which government have already even announced, when it comes to e-invoicing portal also. Today, if you ask me that, okay, let's say my turnover has exceeded the limit of this 5 crore, but let's say I'm mentioning 4-digit, can I do that? Maybe you can answer. Like today what happened is, let's say on the e-invoicing portal, I have already exceeded, and obviously invoicing is applicable if my turnover is more than 10 crore, right? So my total turnover was, let's say, 15 crore. I have already registered on the invoicing portal also. So now the question is, if I just mention this digit, like say 4-digit HSN code, whether I will be able to generate the IRA number or not. on the e-invoicing portal. So I could see answer from Ruchi. Mehul says no, Chand says no, Shivasan says no, Amar says no. Okay, so most of you are saying no. So today, if you ask me, right, government, they have not kept any validation. On the invoicing portal, they have not kept validation, but that is a validation they are going to put, right? So maybe in a week time or 2 week time, you will see that the government is going to put a validation. Even on the invoicing portal, if you try to put the HSN code, which is less than 6 digit, in that particular case, they will throw a validation error and you will not be allowed to generate the IDA number, and it will fail at that point itself. So this is really very important that you update your entire master data of your HSN and make sure that HSN master has at least 6 digit, right? That is one another important point which we should keep in mind, so that you don't face any problem while you're generating IRN number or while you're even filing your GST1, right? So this is like another important point which we have to keep in mind. And I think there is also one question I could see: what if I'm not getting 6 digit HSN code? So I saw the government master, but there was no 6 digit HSN code. There's an 8 digit HSN code for a particular item, but there is no 6 digit. Can I just stream that 8 digit to 6 digit and I can just show that? I would say don't do that. So it was also, there's also a proper clarification which has been given that you don't trim that 8 digit to 6 digit. In that case, you should mention the entire 8 digit HSN code in that particular invoice, and even in the HSN summary, and even while you're generating the IRA number. So we should never trim that 8 digit HSN code to the 6 digit HSN code. So this is another important point which we should always keep in our mind. I could see another question from Saket, who is asking, is it even applicable for SSC? Yes, Saket, whenever I'm saying HSN, it includes your service accounting code also. So it's for both HSN as well as SSC, which means it is for both goods as well as some like services, right? So we have to keep in mind for both this thing. Another question I could see from Praveen. Praveen is saying, in case of mixed supply, which HSN has to be mentioned, highest rate HSN or a principal supply HSN. So Praveen, if you ask me in that way, you have to first see how exactly you're creating the invoice. If you're creating the invoice for separate line item, you're actually mentioning all the line items separately. In that particular case, you have to always mention the supplies which is there in a particular line item. But if let's say there's a gift box, for example, right, and that gift box have multiple line item, it has chocolate, it has maybe some napkins and all that, right, and everything have a separate HSN. In that case, you have to put the HSN code for the entire gift box. That is what you have to always do in this case. So this was the part when it comes to the HSN code, like exactly what we have to do. Then the next important point is about the QRMP scheme. We all know that when it comes to the QRMP scheme, it's nothing but a quarterly return monthly payment scheme, and it is applicable in case your turnover is up to 5 crore, right? So whenever your turnover is up to 5 crore, you can always offer this scheme. And in this scheme, the government says that here, if you offer this scheme, then you have to file your GST1 as well as your GST3B on the quarterly basis. So you will be filing your GST1 as well as 3B on the quarterly basis, though the payment has to be done on the monthly basis, right? That is what they have to do. So monthly basis, you will just go ahead and make the payment, and there then you will be like, okay, anyhow, what is the benefit of this QRMP scheme, right? That's the another important point which we always think that, okay, if I have to anyhow make the payment, I will be doing all calculation, and what is the benefit? So for that, the government have also come up with that, okay, you just make 35%, right? Whatever your last liability for the last quarter liability, you just make the payment of 35% on top of that, and that's enough. You don't do all that calculation. I'm okay with that, right? So this QRMP scheme becomes beneficial if you actually have only B2C supplies, right? You can always make the payment on the monthly basis, and when it comes to filing of your return, you can always file the return on the quarterly basis. So both of your GST1 as well as GST3B has to be filed on the quarterly basis. So to opt with this scheme, we have to opt every quarter, and if you don't opt, by default they make whatever you have opted in the previous quarter. So the date for opt-in or opt-out is 30th of April 2023 for your next quarter, which is from April to June 2023, right? So for April, May, June quarter, you have to opt for this scheme or opt out of this scheme by 30th of April 2023. So this is something we have to always make sure. So I think Dinesh is asking what is the eligibility criteria. So Dinesh, if your turnover is up to 5 crore, right, in that case you can opt for the QRMP scheme, which means you can always file your 1 as well as GST 3B on the quarterly basis. But when it comes to making the payment, you always have to make the payment on the monthly basis. But here again, one important point which we should keep in our mind is that even when you're opting for the QRMP scheme, you should just think one more part is that if you are also making some B2B supply, I will just ask you one simple thing. If I'm making a B2B supply, can I go ahead and offer QRMP scheme? The answer is yes, I can always do that. But then the problem comes in, what about the recipient? We all know that there is one condition of claiming the ITC by the recipient. And that condition is the recipient can go ahead and claim the ITC only when that particular invoice is reflected in their GST 2B. Right? That is the only condition. Then they can go ahead and claim the ITC. So here, even when you have opted for QRMP scheme, there is one more functionality which is known as invoice furnishing facility, which is IFF. Right? So in that case, you have to upload all your B2B documents. If you're also doing B2B supplies, right? You have to upload all this B2B document using this IFF facility, which is invoice furnishing facility, so that this invoices gets reflected in the recipient's 2B and that person is able to claim the ITC. This is one important point which we should keep in mind, that even when you're opting for that, and if you have opted for B2B, you have to upload all your B2B documents using that IFF by 13th of every month, right? So let's say for April, you have to do by 13th of May, you have to file that, and accordingly, the recipient will be always able to claim the ITC. But this is again an optional in nature. It's not like IFF is mandatory, it is optional, but it's always recommended that if you're dealing with the, I would say, B2B supplies, you should file that so that recipient can go ahead and claim ITC. Otherwise, recipient will say, okay, I'm not able to claim ITC. I'm not going to make you the payment, right? That's another problem which you may face. So it's always recommended if you're doing B2B supplies, then you should always go ahead and even file the IFF. So I could see some people ask, okay, then what's the benefit of QRP? I'm anyhow doing everything on monthly basis. See, the only benefit is, let's say if I'm only in with B2C business, I'm not even doing any B2B supply, then it's very beneficial, right? Because then I can always go ahead every month basis. I will just file on the basis of 35% of whatever was there, my whatever I have filed. So I can always do that. And when it comes to filing my GST 1 and my GST 3B, I will always be filing on my quarterly basis. So my burden of reconciling everything with my 2B, 3B on a monthly basis can be go and shifted to a quarterly basis. So that's the only benefit when it comes to the QRMP scheme. Now the another part is about the ITC 04. And when it comes to the ITC 04, we know it has to be filed by the principal who is actually sending this goods to the job worker, right? Where their turnover in the previous financial is, if it is up to 5 crore, then they have to file on the yearly basis. And the due date for that is 25th of April 2023. And when we talk about if their turnover was more than 5 crore, then they have to file on half yearly basis, right? So that is what is the time limit. So you just have to make sure whether your ITC 04 has been filed or not. So that's another important point. So if you're dealing with a job worker, you're sending the goods to the job worker, in that particular case, you have to file your ITC 04 also. So not only filing ITC 04, that's one important point. You should always keep a track of that, okay, if I have sent my goods, which is my inputs, right, to a job worker, you just have to make sure whether that input have been written within 1 year or not. So if it is not, then again, you know that there's a thing that it will be considered as a supply and you have to charge GST on that. So this is another important point which we should keep in our mind, that whenever you're sending the goods to the job worker, whether it has been written within 1 year, and if it's a capital good, then it should have been written within 3 years, right? So that is another important point which we should again keep in our mind. So when we were talking about this, right, because we're already at the time of closing our books of accounts. And when we are closing our books of accounts, it's not always about like looking after, we know we have thought about a lot of things. But one part which we do mostly on the annual basis, but it's always recommended that we always do that on a monthly basis. And that's that you always file 9 and 9C. And we all know the due date for filing 9 and 9C, which is your 31st December of the next financial year. So if I just talk about FY 22-23, you have to file by 31st December of 2023. But the important point we should always keep in our mind is that though we have to file 9 and 9C on 31st or before 31st December, it's important that your reconciliation, your books are properly closed. Your returns are already filed on time, right? Now, when we are sitting on 3rd April, we are required to file our GST 1 and we are also required to file our GST 3B for the month of March, right? I'm assuming you're a monthly filer. So, or even if you're a quarterly filer, you are required to file your Jan, Feb, March return 3B and the 1 by 11th or maybe 20th of April, right? So it's important that before you even file your GST 1 or before you even file your GST 3B, you are closing your books of accounts very cleanly so that there is nothing like some transaction which is related to current year is going to the next year, right? So just to avoid that, it's always good that you reconcile everything. If there's certain adjustments to be made, you make it in the March return period itself rather than making to the next year, which is having a spillover effect, right? So try to remove all the spillover effect to the next year, and for that you have to make sure, are you reconciling your entire revenue GL, right? You have revenue GL, are you reconciling your revenue GL with your tax GL, with your sales register, your GST 1 and 3B? All of this should be actually matching. Your revenue GL, tax GL, sales register, GST 1, 3B, all your information in respect of this should be matching so that if there were certain discrepancies, it has been adjusted. But it's not always true that, okay, my revenue GL will always match with sale register. Obviously, that will not be there, right? And some of the cases would be, think about there's an interest entry which is reflecting in my revenue GL, right? But that will not be part of my sale register at all, right? That's okay. But you should know there would be discrepancies. Yeah, I could see, okay, there's some entries coming as a part of my tax GL. And when I'm saying some entries forming part of my tax GL could be stock transfer. Whenever I'm transferring the goods or services, supplying goods or services from one GST to the another GST of the same PAN, then it is forming part of my tax GL, but maybe I don't have to show that it's a revenue because that's not my revenue at all, right? So that entry would not be forming part of revenue GL. That is okay. But you should have a proper reconciliation between your revenue GL, tax GL, the sale register, the GST 1 and GST 3B so that everything is in sync. And if there's a difference, you know that this is a reason of difference and it's a genuine reason that there's a difference for it. Because that is something you have to make sure that if there was some entry, let's say you had shown some revenue, but you forgot to apply tax on that, right? You forgot to charge tax on that, you have not shown in GST 1, then make sure you're showing while you're filing your GST 1 for the month of March itself, rather than showing maybe after 2-3 months, right? You can always do that also, but then there would be an implication of interest you have to keep in mind. So it's always good that you close everything in respect of a particular thing in a one particular return period. Similarly, there can be certain entries forming part of GST 1, but you forgot to make the payment in GST 3B. If that's the case, then please make sure that you are making certain payments in your GST 3B. There can be vice versa case also. You would have shown something higher in 3B, but you forgot to report in your GST 1. Or maybe it was a vice versa thing, you forgot to reverse something in your GST 1. Then you have to make sure all of this are reconciled and you have a proper entry while you are closing your books of account. And if there is certain adjustment entry, you have already passed that adjustment entries. So when we were talking about reconciliation between your GST 1 or GST 3B or revenue GL or tax GL or the books of account, one another important point which we should always keep in our mind is that we only not have to only look at a higher level. One is, okay, my tax liability here is, let's say, 20 crore, right? Or maybe 20 lakh was my tax liability. Maybe here also it is 20 lakhs. That's okay. It's fine. It was matching. The another problem which we may face is that many times, let's say in GST 1, I have reported correct liability. In 3B also I have reported correct liability. There was no problem. It was even matching with my books of account. But the problem was that instead of showing it as a B2B supply, I have shown as a B2C supply, because that time when I was trying to punch in the GST, it was showing incorrect and I didn't have the time and I actually punched it as a B2C supply itself. So I considered that particular document as a B2C supply rather than the B2B supply. In that particular case also, the important point which you should understand is try to get a confirmation from all of your registered customer that, hey, this is information I have filed in my GST1. You check your GST2B. If everything is perfectly coming, it's okay. You feel there's certain discrepancy, communicate me this to now, right now, so that I can make the corresponding amendments and the adjustments in my GST1. Right? So that's like another important point which we should keep in our mind. So in same way, if you have missed some liability, you have forgot to report any liability, it's always good that you report that entire liability while you're filing your GST1 and 3B for the month of March 2023. In same way, there can always be high chances that you have missed declaring certain invoices for FY22-23 in your GST1. If that's the case, then again you just go ahead and declare that missed invoices. Right? And if you feel that, okay, there were certain documents, right, where you forgot to issue a debit note, right, there were some values which has been undercharged and you felt, okay, this has been undercharged and I have to actually raise a debit note for that, you should always go ahead and even raise a debit note. Similarly, if there were certain discounts which has to be given, which means you have to raise a proper credit note, we know that there is also a time limit for raising a credit note. So for any financial year, let's say if I talk about FY 22-23, you can maximum raise a credit note till my October filing, right? Which means till my 30th November. So one important point that you should always raise any credit note by 31st of October for any supplies which was happened in FY 22-23. So for any supplies happened in FY 22-23, the maximum time limit when you can raise a credit note is till my October filing, right? So October filing, we all know when we do that, we always do that in the month of November, which means November May I will be showing any credit note for document dated October. So which means by 31st October, you should be able to create a credit note which is in respect of the supplies which happened in FY 22-23. So that forms part of your October return period, which has to be filed by November. So this is like another point which we should always keep in our mind. So not only this, so when we just talk from the sales perspective, right, there's also an important point from the ITC perspective. And when we talk about ITC perspective, there are certain conditions which has to be followed while claiming the ITC, right? So here, I think most of us have missed, but now I would suggest, because anyhow we entered into the new financial year, right? It's always good that we keep our books very clean from our starting of the financial year. And if certain adjustment has to be done in the previous financial year, you just do in March itself, right? All adjustment related to previous financial year do in March, so that when you try to file your April return period, which will be in the month of May, your books are very clean. You have clearly called out, okay, this is for my one liability, this is ITC which I'm going to claim in GST 3B, and I will give you a very simple example for this. Today, if we just look into the conditions of claiming ITC, we all understand that when it comes to conditions of claiming ITC, we should have a valid invoice. We should know that we have received the goods and the services. The ITC is actually coming in my GST 2B. We know that there are recipients who have actually filed the return or not. There are certain conditions which has to be fulfilled. We know that it is not covered under section 17.5, which means it's not a block credit. These are certain conditions we have to follow. But here, not only this, it's also become important that how we are reporting this ITC in our GST 3B. And when we just talk about the reporting of ITC in GST 3B, from the August return period, they have changed the way we are reporting that ITC. There used to be one way before that, but after that they have changed it. Today, when we look into the ITC which is coming in GST 2B, it is a kind of becoming mandatory that how we are reporting or reconciling, right? It becomes kind of mandatory that we reconcile our register, which is purchase register, with our 2B, which is our books of account with the 2B, and then only we can go ahead and show the ITC in different tables of GST 3B. So for that, you may see that, okay, there were certain documents which was appearing in 2B, but you cannot claim the ITC in a particular month. It's normal. You can always have that. So if you now ask me, let me ask you one simple question. If I just talk about FY 21-22, if I just talk about FY 21-22, can I claim any ITC which was related to FY 21-22 today on 3rd April? Can I claim any ITC which was related to FY 21-22 today on 3rd April? I could see answer from Vivek says no, Chandresh says no, Anku says no, Rohit says no, Ajay says no, Shashi says no, Ashish says no, Somna says no, Sadhanand says okay, no, Shravan says no. So everyone is saying no, and which is actually a right answer. We cannot claim any ITC which was related to FY 21-22 now, right? Which means anyhow what happened had happened. If I had to claim ITC, I would have claimed it. I had to reverse, I would have reversed it. I would have filed my 9 and all. Everything had happened for FY 21-22. Now question is for FY 22-23. Today, if I have to claim any ITC related to my FY 22-23, can I go ahead and claim ITC? I could see Sunil says yes, Ankur says yes, Chand says yes, Pooja says yes, Nag says yes. Everyone is saying yes, yes, you can go ahead and claim the ITC, and obviously we can claim that, right? And there's a time period I can claim any ITC which was related to my FY 22-23. There's a time limit, and I can always go ahead and claim ITC till my October return period, right? So I can always claim till my October return period filing, which means while I file my GST 3B for the month of October, which should be filed by 30th of November, right? At least by 30th November it should have been filed, so that we can always do that, and it is allowed. There is no problem over there. So for FY 22-23, I can always go ahead and claim the ITC till my October return period, which means and which has to be filed by 30th of November. Now the question is that we understood that yes, we can claim the ITC, there is no problem. Government had introduced one section called 4D1 in GST 3B, right? In 4D1, they just talk about that this is an ITC which has to be reclaimed, which was reversed in the previous financial year. We have to clearly show that information there, then only we add that value in 4A5. In short, government is trying to compare the value which are going to show in 4A5, whether it is actually matching with the value which is coming in your GST at 2B, which is the eligible ITC other than reverse charge. That is what government is trying to do. Value you put in 4A5, they are trying to match that the value in 4A5 is actually equivalent to the value for a particular return period which has been mentioned in 2B, which is other than reverse charge and which is an eligible ITC as per 2B. Is that true? Right? That is what government is trying to do. But we know that there can be certain ITC which I have not claimed in the particular return period. I may always claim in the different return period, right? There can always be cases where I cannot claim the ITC in a particular return period and I can only claim in the next return period. I will give you a very simple example. There was a supplier who was very compliant, and that supplier has uploaded an invoice dated 30th of April, right? Supplier was compliant. He filed his GST 1 for the month of April. I was able to see this particular invoice in my GST 2B for the April return period. There was no problem. But I received this good on 1st of May. When I received this good on 1st of May, I know that I cannot claim ITC while I'm filing my GST 3B for the month of April. Is that true? Supplier was very compliant. He filed his GST 1 on time on 30th, like I would say while filing his GST 1 for the month of April, that person showed document dated 30th April and he is filed also. I was able to see him in my 2B also when I was able to see in my 2B, but I received this goods on 1st May, so I cannot claim ITC in my GST 3B for the month of April, right? And I could see answer from everyone already saying yes, so which is the right thing. Now the point was, how am I going to show this transaction while I'm filing my GST 3B? Right? While I'm filing my 3B, I have not received, this is something which is missing in my purchase register because I have not received the goods while I was filing my return for the month of April. So here the government says that you have to add that as a part of 4A5. You have to add this as a part of your table number 4A5 because this was an ITC which was appearing in your GST 2B for the particular return period. Right? So I am going to add that as part of my 4A5. There is no problem. My finally 4A5 is matching with my 2B. I have added that. But I cannot claim ITC. Since I can't claim ITC, the government says, okay, do one thing, do a temporary reversal for the same. So they introduced one section called 4B2, and 4B2 is a kind of a temporary reversal, which means I cannot claim ITC in the current month. Maybe in future I may go ahead and claim the ITC. So in 4A5 you added, let's say the ITC amount was 100. So 4A5 you added 100, and 4B2 you have done the reversal, which is 100 rupees. So net value, when we look into the 4C, the value was 0, which means I am not claiming any ITC. There was no problem. My now April return period, when I look into my GST 3B, it's actually matching with whatever is coming in my 2B of my April month. There was no problem. Like, okay, government is trying to just match the value which is coming in 4A5, whether it is matching with my 2B eligible portion other than reverse charge. That is what government have done. Like, okay, April is matched. Finally, in the month of May, because I have received this goods, obviously I'm allowed to claim the ITC because it is appearing in my 2B. I have received my goods also. It is not on the 17.5. I have fulfilled all my condition in the month of May for this particular document. I can always go ahead and claim ITC. Now, when it comes to claiming of the ITC, I will be adding this 100 rupees in 4A5. Right? That is the only section where I can show that yes, I have to claim the ITC. Now, when I add this value in my table number 4A5, this is obviously not matched with my 2B for the month of May. Right? So the government says, yes, I know this will not match. Do one thing. I have introduced one new section or a new table, which is table number 4D1. You add this 100 rupees also in 4D1, and then you show in 4A5. So now what I have to do, I have to put this value in table number 4D1, and at the same time, I'm going to show the value in 4A5. So ultimately, when now government tries to match the value which is coming in 4A5, they say, okay, now when I match this or do the comparison between your 2B and 3B, what I'm going to do, I will see the value in 4A5. I will subtract the value which is coming in 4D1. It should actually go ahead and match with your 2B eligible amount other than reverse charge. It will match. Yes, it will match. Because the 100 rupees I showed in 4A5, the same value I've also shown in 4D1, it will now match. Right? That is what the government is trying to do, and which is actually perfectly okay. But the important point which we should understand. See, I was talking about all this point because there is some relevance over there. That is very important while you are filing your March return period. And what is the relevance here? See, this particular thing happened in the month of October, right? So I would say not October, August month, right? The government have come up with the changes in the month of August. Till the time, there can be chances that there was certain ITC which was appearing in your gesture 2B, but you have not claimed ITC till now, right? So it's always good. And if you have not done that, right? So this is applicable for all of you. If you have not done till now, I would always suggest this is something we should always keep in mind and do it now itself. If there was some ITC which was appearing in your GST 2B and you have not claimed the ITC till now, and if you know that you have to claim it, you don't have to reverse it, you have already fulfilled all the condition, claim in the month of March itself. There is no problem. But still, if there is some ITC which has not been claimed, suggested put that value in table number 4A5. If there was some ITC in respect of FY 22-23 which was appearing in your GST 2B and you have still now not shown in table number 4A5 and you have not done this temporary reversal thing, put that value in table number 4A5 and do the temporary reversal because you cannot claim ITC, right? So that 4C mein the value will be having a nullify impact. So in 4C you will see a nullify impact. There would be no question of interest at all because you have not claimed ITC, but that value is now forming part of 4B2, right? So if you have not only done that, I will suggest do the reconciliation from your April 2022 return period till March 2023. Check all the ITC which was appearing in 2B but not part of PR and you have not claimed ITC. Put that value in the table number 4A5 and do the temporary reversal in 4B2 so that from the next financial year, right? From the next financial year, whenever you file for the month of, let's say, April, if you see some ITC now flowing in your purchase register which was related to your previous financial year, you will always be able to put it in 4A5 and 4D5, right? And you will never have any impact. There would be differences which will be coming up, but it will be only in one return period. There would be, everything will be very clean from your next return period onwards. From the new financial year, everything will be very clean, everything will be very sorted. So it's always good that if there is such kinds of adjustments which has not been done till now, just do it now. Now, when we were talking about all this, right, it's very important to even understand the implication of rule number 42 and rule number 43 because we are already at the end of the financial year, right? So here We know that if you're dealing with both the taxable and the exempt supplies, you're already doing the taxable and the exempt supplies. In that case, if we have some common credit, we have to reverse the ITC on that common credit, right? So if there is a both exempt and the taxable supply, we have to reverse the ITC on the common credit. So if you have, so here when we're talking about reversal of ITC on the common credit, we do every month, right? But then we also have to recalculate that basis the yearly ka turnover, and that should also be done while you're filing your GSTR 3B for the month of March. You just check your entire turnover for the entire financial year, recompute your total ITC which has to be reversed, and do while you're filing your March return period, so that all that adjustment again for the particular financial year is there in the same return period itself. That's like another important point which we should again keep in our mind while we are looking for the reversals part also. Not only this, whenever you are looking or finalizing your books of account, just go through your income side very carefully. Just look into this. Okay, this is my turnover. Whether this is a taxable turnover or it's an exempt turnover or it's a non-GST turnover, right? If it's a taxable turnover, make sure whether GST has been paid or not. It has been reflected in GST 1 as well as GST 3B. It is done perfectly okay. If there is an exempt turnover, right, there can be exempt supplies also. If there is some exempt supply, then again make sure whether the corresponding ITC, if there is a common ITC against that, whether the ITC has been reversed on the or not. If there is common ITC, just make sure that has been reversed. If it's not done, you just do it now, right? So many times we forget to do that, and when I'm looking into revenue, always look into all the incomes, even if it's an interest income, right? Interest income, whether it's an exempt supply, yes, it's an exempt supply. Do I have to do the reversal under 42? No, we don't have to do the reversal under 42 because they have clearly mentioned out that in respect of interest on FD, we don't have to. But let's assume there is a sale of mutual funds, right? Sale of mutual fund, whether it's an exempt supply, yes, it's an exempt supply. Do I have to reverse under 42? Yes, you have to do that. So you have to very carefully look into each and every income and then see whether it was an exempt supply, it was a taxable supply, do I have to do the reversal on 42 or not, whether I have paid the correct taxes or not, whether the correct HSN was quoted or not, whether the correct rate of tax was quoted or not. This is something which we should always keep in our mind while we are closing for your books of account. So from the sale perspective, when we are doing that, similarly, when we are looking into the exempt supply, the purchase side, right? Just look into the list. Many times what happened that there could be certain ITC we have not even booked in our books of account. I will give you a very normal example. Think about there were bank charges. It is coming in our 2B, but it was never recorded in our books of account. We have directly expensed it out because many times we used to do that. But you know, you are allowed to claim the ITC on that. In that case, if you are missed claiming some ITC, just make sure you are having proper document for claiming that ITC, and you're also claiming that ITC in your GSTR 3B. So if you have missed on something, just go ahead and claim the ITC again, just to make sure everything is in same page. So you do the proper purchase reconciliation and make sure that everything has been sorted. There's a proper reconciliation between your 3B, the purchase register or books of accounts, along with your expense GL, and you may also have your entire 2B reconciliation, so that if there is some mismatch, you should know the reason of the mismatch and accordingly show in your GSTR 3B also. Right, so that's another side, which is a purchase side reconciliation. In the same way, you know that reverse charge liability also. When you're looking after the purchase side, whenever you're looking into the expense side, again, look after each and expenses very carefully. There can be certain expenses where you had to pay the taxes under reverse charge because when the accountant booked, he was not aware about the GST law and he has missed reporting that under reverse charge. So look after that expenses very carefully and then see, okay, if this is covered under reverse charge or not. If something is covered under reverse charge, you have not do that. See if whether it was a firm unregistered or registered. If it was firm unregistered, make sure you have created a self invoice. You have a proper self invoice. You have created that. You have also go ahead and claim show the liability in your GSTR 3B, and at the same time always go ahead and claim the ITC unless it is covered under 17.5, right? So that's another point which we should carefully look after. Similarly, if there was some block credit, if you have wrongly claimed certain ITC which was under 17.5, just reverse that ITC while you're filing your GSTR 3B. So these are some points which we should always keep in our mind, which means if there was some missed ITC which you had to claim, you just go ahead and claim that ITC. If there was some ITC you should not claim, but you have actually claimed, then you should just do the reversal of that ineligible ITC. And there are many times expenses we never know that, okay, this is something which you have recovered, or there is some food and beverages, but you have wrongly claimed the ITC. Just reverse that ITC, right? Then when it comes to rule number 42 and all, you have to do the recalculations and all. So do that recalculations while you're filing your March return period, and do that or pass that adjustment entries also in the books of account. So this were main some points which we should keep in our mind when it comes to the sales side, purchase file, filing the forms, looking at the RCM thing, looking after the expenses side, right? This is something we should always keep in our mind. And not only that, I would say that right now, right, you would have seen that yesterday only the government, they have passed on some notifications which they have issued, where they have given the amnesty scheme, where if you have missed filing your GST 9 for FY 17, 18, 18, 19, 19, 20, or 2021 or 21, 22, so they have reduced the late fees also. That's what they have done. So you can always look into this also. That is something the government have already done past. But this amnesty scheme, remember, this is only from April 23 to 30th June. So if you file all this pending written by this time period, then this amnesty scheme will be applicable, and you can always go ahead and file your pending returns if it was applicable to all of you, right? So this is what they have done. Similarly for GSTF4, if you have missed filing your GSTF4 and you have opted for composition scheme and you have not filed your GSTF4, for that also they have come up with this MST scheme, where they're saying if you file between April to 30th of June, then there is a reduced late fees. So you should always take a benefit of this and file all of your pending returns, right? So this is what they have done, and I think this was main part. Obviously there are other parts to it, but this is the main important point which we should always keep in our mind when it comes to your year-end compliance with the GST perspective. You should always look after all the sorts of reconciliation, whether it's sales side or the purchase side, the RCM thing, so that also just try that instead of waiting for filing your 9 or 9C at the later stage, right? Do all sort of reconciliation. If there's certain adjustment entry, just pass it now. If there was something which was reported as a B2C, but you had to report as B2B, just make the B2B now itself while you're filing for the March return period, so that all the documents, all the things which was related to a particular financial year remains in that particular financial year, and there is no spillover effect, right? This is something all for today, and I know there was a lot of queries which have been asked by you, and I was able to answer some of the queries, and I was not able to answer a few of the queries. But still, if I have not answered your queries, please feel free to mail us at gstsupport@cleartext.in. So that's our mail ID. You can always mail us at this mail ID. And I think some of you are also asking for the PPT. So we will happy to even share this PPT over your mail IDs. In case still if you don't receive this PPT, you can just mail us at gstsupport@cleartext.in. That's my mail ID. Or you can even mail me at surbi@cleartext.in. That's my mail ID. So it's gstsupport@cleartext.in, or you can mail me at surbi@cleartext.in. So that's my mail ID. So thank you for attending the webinar, and hope that was useful. And if I have not answered any of your query, please feel to even mail your query at gstsupport@cleartext.in or at surbi@cleartext.in. Thank you very much.